everyone. Welcome to Wealth Redefined. I'm your host, Michael Reynolds, certified financial planner and owner of Elevation Financial on the web at elevationfinancial.com. All right, it is creeping up on the tax deadline. It may be here, depending on when you're listening to this. And April 15th is the typical tax deadline. Millions of Americans scramble to meet that deadline. But today we're going to talk about why filing a tax extension is really not a big deal and why it might actually help you. So a lot of times there's anxiety around filing taxes, meeting that April 15th deadline. And a lot of people worry about missing that deadline. But here's the thing. Filing a tax extension is completely normal. A lot of people use it, and in many cases, it's a smarter choice. So a lot of times people can't meet that April 15th deadline for a variety of reasons, and they file extensions. And some people have some misconceptions about filing a tax extension. If you've ever hesitated to file the extension because maybe you're worried it might trigger an audit or some kind of red flag to the IRS, I'm here to help you let that fear go today. The reality is much different than what people might assume. So let's talk about what a tax extension actually does. When you file for a tax extension, you're asking the IRS for more time to submit your completed tax return. In most cases, that's going to push your filing deadline from April 15th to October 15th, giving you an additional 6 months to get everything in order and get filed. To file an extension, it's pretty straightforward. You submit IRS Form 4868 by the original April 15th deadline, and the extension is then automatically granted. And just about every tax filing software will let you submit this form electronically. You just click a button and it just gets filed. There's no explanation required. No special circumstances needed. The IRS doesn't ask why. It's just pretty much automatic. So one important distinction, though, to keep in mind as a caveat, an extension gives you more time to file, not more time to pay. So if you owe taxes, the amount is still due by April 15th. Filing late on a payment can result in interest and penalties. So if you think you owe, you will want to make estimated payments when you submit that extension request. So filing an extension is a lot more common than you might think. You're not doing anything unusual or wrong when you file an extension. You're doing something that millions of people do every single year. The IRS routinely processes tens of millions of extension requests every year. Business owners, high-income earners, people with complex investment portfolios, real estate investors, and even people who've just had a busy spring all file extensions on a regular basis. It's part of the tax system, and it's available to everyone. So here's something people are worried about. Filing an extension does not increase your audit risk. It's one of the biggest myths when it comes to taxes. The IRS selects returns for audit based on a variety of factors, things like discrepancies between reported income and third-party information, unusually large deductions relative to income, certain business losses, and statistical anomalies in the data. The date your return was filed is not one of those factors. There's no internal IRS flag that marks extended returns for closer scrutiny or anything. A return filed in September is reviewed through the same lens as one filed in February. The timeline of your filing just doesn't factor into audit selection. In fact, quite the opposite. Filing an extension could actually reduce your audit risk, mainly because it may facilitate the filing of a more accurate return. So it has nothing to do with the IRS scrutiny or anything. It's more about if your return is extended because you want more time to get it right. Getting it right by nature of what you're doing could reduce your chances of an audit because it's a more accurate return. So a well-prepared return is a better return, even if it's filed later. So when you rush to meet a deadline, mistakes can happen. You might overlook a deduction you were entitled to. You might enter a figure incorrectly. You might forget to include a 1099 you received in January and set aside somewhere. So these kinds of errors are not just costly from a financial standpoint. They're also the type of inconsistencies that can draw attention from the IRS. And so when you give yourself more time, you give yourself the opportunity to be more thorough. You can gather every document, double check every number, make sure your return accurately reflects your financial situation for the year. And a clean, accurate, well-organized return is far less likely to raise questions than one that was kind of just thrown together under pressure. This logic applies whether you're self-preparing your return using tax software or working with a tax professional. More time generally means better work. So when you work with a tax professional, extensions can still make sense. If you have a tax pro, there's a good chance they've already talked to you about extensions. Tax professionals kind of face an enormous workload that's concentrated into a very narrow window between January and April 15th. There's only so many hours in the day and only so many clients a firm can serve at the highest level during that crunch. And often, for a variety of reasons, their clients can get documents to them late. And it's pretty common for a tax pro to say, if your documents aren't in by a certain date, then I'm automatically filing an extension. And that's fine. Maybe you just can't get the documents in on time. They are well within their rights and being very reasonable by extending the return to make sure they have plenty of time to address it. So by agreeing to an extension, you're giving your tax professional the breathing room to do their best work on your behalf. So a return prepared in June or July when the pressure is off a little bit is often more accurate and more carefully reviewed than one prepared during the height of tax season. So if your tax situation involves business income, rental properties, partnership interests, or other complexity, that can be very true. So rushing through a complicated return is not usually going to be in your best interest. So when does waiting make financial sense? So beyond accuracy, there are situations where extending your return is financially the smart move, regardless of anything else. If you're a partner in a business or receive income through a pass-through entity, you might still be waiting on a K-1. These forms have their own deadlines. They're often late. And you want to wait for the most accurate numbers. And especially if you make plans to contribute to a retirement account, such as a SEP IRA, for example, you technically have until the extended due date of your return to fund that account. And so for a self-employed individual or a business owner, that means that the extension can preserve your ability to make a retirement contribution, which is a good planning opportunity. So waiting can give you more time to explore whether you qualify for deductions or credits you might not have considered. You might identify strategies during a less pressured review that you might otherwise miss. All right, so let's talk about the penalty for not filing on time. So one area where deadlines really matter is the failure to file penalty. If you miss the April 15th deadline and have not filed an extension, the IRS can assess a penalty of 5% of unpaid taxes per month, up to 25%. Here's the important thing. Filing the extension avoids that penalty. Once you've filed Form 4868 by April 15th, you've satisfied your obligation to file on time. There's no late filing penalty on a properly extended return, even if you submit your completed return as late as October. October 15th is the new deadline. The only area that's of concern, and you kind of have exposure, is owing taxes. If you don't pay the taxes you owe by April 15th, you can get interest and late penalty on that balance, and that'll continue to accrue. So that's why making a reasonable estimated payment when you file is a good idea if you expect to owe. So what are the steps if you file an extension? First, submit IRS Form 4868 by April 15th. And again, most tax software have that feature as a standard thing. You can just file it electronically. It's super easy. Next, estimate what you owe. You submit that payment with your extension if you expect a balance due. You don't need to be exact, but getting reasonably close can minimize the interest. Then pay attention to October 15th. That's your new deadline. Don't let it sneak up on you. That's your hard deadline for filing taxes now. And then, of course, gather up your documents over the next few weeks without the pressure of a big deadline coming up, and use that time to be thorough and careful. So if you work with a tax professional, they're typically going to handle filing the extension for you on your behalf. They'll just take care of it for you. So be sure you're communicating with them about whether you expect to owe anything. So filing an extension is not a bad thing. It's not an act of avoidance. It's not a red flag. It's not a mistake. It's a perfectly legitimate, widely used option that the IRS built into the tax system because tax preparation takes time and life doesn't always cooperate with a fixed April deadline. If you have documents you need and are ready to file by April 15th, go ahead and do that. That's good. But if you're feeling rushed, if you're waiting on information, or you just want more time to make sure your return is right, filing an extension can be the responsible thing to do. So more time usually means a better return. And a better return means fewer errors, and that gives you less to worry about. So don't let it scare you if you're on track to file an extension this year or any year. All right, with that, as always, you can find me on the web at elevationfinancial.com if you'd like to learn more. By the way, as a side note, I don't mention this a whole lot, but I do file tax returns as well. I do tax prep. I only do tax prep for financial planning and investment clients who are already clients. So if you're going to become a client, I can file taxes for you. But I only do tax prep for clients who have a financial planning or investment management engagement. And so that would be a precursor to tax prep. All right. Again, my website is elevationfinancial.com. Feel free to send me a note there or book a free consultation if you want to chat. And thanks for joining me today. As always, have a great day. See you next time.